So, welcoming you to the second panel discussion of the day. I have my esteemed co-panelist with me. What we are going to do is that we are going to first, our theme of this panel, of course, is aligning the corporate culture with the new tax laws. However, we'll just first deep dive into what all are few of the things that one should be looking at. And then, of course, we'll get into the specific topics of it. Look, when we start talking about corporate tax, it's if you compare with any other country corporate taxation and the regulations and other things, it's far more simpler in its approach. It's kept at a level which is attractive, which is at 9%, right? You compare anywhere else in the world, I think there are only 3 or 4 countries which are either below or at same level. Okay? Third is that the mechanism of the entire tax structure, and one should, if we all are coming from India and you look at it from an Indian perspective, Indian tax laws start with the belief that a taxpayer is guilty unless he proves himself correct. Here we start with the belief that taxpayer is correct unless we find something wrong with him. So, which is if you say that's a paradigm shift in the approach. Okay? So when you start with that belief, now you put yourself in a position of a taxpayer. So now suddenly the onus has been shifted to you to comply with the law correctly. Okay? So as long as you do the correct compliances, you are not going to get, or you're not falling foul of the tax laws. Second and most important thing that you must remember, when we come from common law countries, tax violations or penalties are generally a civil crime, so you go to court, you are penalized, and so on and so forth. When you talk about the civil law countries, generally that line between civil and criminal is very blurred. So even here in this part of the world, in tax laws also, if it is tax avoidance, it can become criminal offense. And you're facing then a very severe jail to every other punishment possible. Why am I highlighting this? Because again, the onus is on you. Onus is on you to comply correctly. And that's where all of us as a compliance professionals have a role to play. Right? So that's the second most important part. The third is that, look, thresholds are lower. They've kept it in various provisions of the law, certain threshold to be at a higher level so that the small and medium businesses doesn't need to comply. We have a small business relief of 3 million. We have up to 1 million individual businesses not being taxed. We have transfer pricing documentation kicking in only after 200 million. We have interest deduction limitation applying only after 12 million. So when you look at all these numbers, what it suggests is that, like the other panelist and our guest of honor spoke in the morning, that it's not actually revenue which is the driver for the government. It's more about having a compliant ecosystem where they are trying to make it a law which hampers least amount of participant in a negative way. Right? So they're trying to bring in threshold where small and medium businesses are not impacted so much. And whatever little they are doing, they are keeping the compliance. Your experience of VAT law suggests that the compliance is going to be very simple. What do you do with a VAT return filing? Don't compare to India. GST return filing, you can't file without the help of a professional. Here, a simple BCom or a junior accountant will go open up a portal, fill in 7 or 8 fields, and file a return. Can you imagine that back in any other country? Maybe not. And we do expect that on the same line, you will have compliances on the corporate tax also. Right? If you see the overall scheme, they are saying that, okay, we are going to follow what your accounting policies dictate. So you determine that you are following correct accounting policies, which will give you a resultant taxable profit. Right? So if you follow the right policy, have correct systems in place and have discipline, you'll optimize your tax liability. If not, you'll pay the taxes. So again, idea is not to have too many adjustments. In India, how many of you have prepared income tax return? From your financial statements, how many adjustments you have to go and make to prepare a tax return? You all are aware? Then there is a separate tax audit to make sure that what you are doing is right also. Okay? Here they are saying, don't make any adjustment. We only 1 or 2 disallowance. In that, even interest disallowance, now they have set the limit at 12 million. So that also is not going to apply for 60% of the companies. Right? It's only one, entertainment. 50% disallowed. There is nothing to discuss further. So how many adjustments? 1 or maybe 2? And you arrive at a taxable profit. So is compliance going to be difficult? No. It's your systems, it's your processes, it's your discipline which is going to drive the compliance. So with that theme, keep this in mind first of all, that this is the way the law is being proposed. Of course, with every law there will be some gray areas. There will be some areas which will not be clear. There will be something which will cause some heartburns, and there will be something which will not be acceptable to everybody, right? So those things happen, but then they evolve over a period. Okay, so with this opening remarks, I just want to invite now Ashish to, if you can give your opening comments, then we go into the more detailed topics that we want to discuss.
Good afternoon, everybody. In continuation of what Neerav has said just now, I just want to tell you with my experience, I have been in this profession for last 20 years. I have been dealing with at least more than 25 countries in my academic role, in my professional role, sorry. And this I can assure you with my experience, if you have to rely on me, the code, the way it has come out, is really very simple. I did understand there was one gentleman here, he wanted to understand the technical aspects. See, we are not here to give you a full technical, about the details, which is again a subject matter of a master class or a separate different format. But I can tell you that the way the theme or the way the framework has been built in, it's so very simple, so very lucid, that if you deploy maximum 2 weekends, you will be able to get a full grasp of UAE corporate tax law. And just to give you, I'm just taking your time to give you, there is a beautiful portal available in FTA, in the federal tax portal. There you have the legislation, which is a 60-pager legislation. Believe me, I have not seen a legislation which is so small. And the best part is that the government has made so many endeavors coming out with clarifications. Please, I must tell you, with my career, please believe me, with one word to understand, can I please request everybody to just hear me? A word takes innumerable case laws. A word in the legislation said, may consider, that may, the courts take an innumerable amount of time spent by professionals, by courts, by tax authority to interpret what a word may is written. What does it mean? May means what? And then we argue, as per English law, this is the meaning, this, that. You have so many things to refer. So if the clarifications are coming out upfront by the ministry, from the UAE authorities, it's a very, very welcome stage. And as an opening remark, I want to again say that ministry had come out with private clarifications also. So the law, the authorities are open. You can approach them. You can put in your requests, but you have to be specific. And they will come out with the answers to it also. So
thank you, Ashish. So I would invite Mr. Das to give his general comments.
So thank you. Thank you for the opening remarks and provoking my thoughts. And further, Mr. Ashish added fuel to the fire. Okay? Now both of them told us that is very simple. Go there, file return. Okay? This is from a chartered accountant perspective. But from a compliance perspective, actually, when you look at it, it's a wonderful opportunity for company secretaries to grow here. First, remember this. The complexity does not lie in the law, but in the market. You got innumerable free zones, non-free zones. Free zone person sitting there with a free zone license, but carrying a business in mainland. Okay? Person having license to do X, doing Y. Okay? I mean, when you go and see and on top of it, nationalities from close to 100 countries also are employees. When you actually go to a particular organization as a compliance professional, you meet an African, you meet an American, you meet an Indian, and then you meet somebody else, all in totally different tangents in terms of their understanding. So when it comes to, as a compliance professional, the challenges are many, including your policies and procedures, drafting, and all those things. Of course, I'll go into a bit of technical details of this particular law also. The main point here is that while the law is simple, there are broadly three major compliance requirements. One, registration. Second, filing tax return. Third one, keep all relevant records in safe custody for at least minimum statutory period. That is on the face of it. But when you go into details and see, the issues come more from the business aspects. We'll deal with that later, but from my perspective, I'm going to stick to my stand that it is quite complex considering the market.
Thank you, sir. So that's very valuable, because while we are comparing the overall law with other countries, of course, the law has its own challenges, and that cannot be discounted in any manner. And that's why we all are here spending the full day trying to understand what and where we can add value from, right? So now turning our attention to few things that, okay, how is this going to impact international businesses? Okay, so what is it that one needs to do? What is it that one needs to prepare itself for? What are the benefits? What are the disadvantages from that perspective? And if you look at it, I'll invite Ashish. You're already part of an international business. If you can throw some light, how did you prepare internally? What are your thought process? What is it that being looked at as an MNC? You know, are you preparing for 15%? Are you preparing for 9%? Are you preparing for 0? And these are all the options that you have, right? So what is it that thought processes, and what is it that you're trying to build up from here? And how do you see this entire introduction from that perspective?
Sorry, my bad. Now, one thing I want to just ask you out of curiosity. Please, I might have a stupid question, but you know, I have been working with a lot of countries, a lot of regions, and I've been working primarily with the finance professionals. And I'm again asking this repetitive question. How many of you, by the show of hands, can you please tell me, have you heard about Pillar 2? Pillar 2, see 1, 2, I see 3, 4, 5, okay? I want to reiterate with my permission of my fellow colleagues. Please understand, please hear me. 15% tax across the globe is a reality now. Implementation is a matter of time. Okay? Now you will say, why 15%? How are you saying such a big statement? With the age today of digitization, of globalization, the threshold for 15% tax is mere 750 million euros. If you are doing trading, okay, if you are doing, and with multi-country operations, you will be subjected to 15% minimum tax for each country level. Please mind it. So what I'm trying to tell you, it's a reality. So no person in the earth can operate a business without paying 15% for each country in which he operates. Are we, are we clear on this? So the government, now the question of asking whether we have this, whether why did government impose this tax, we cannot ask these questions. That era is over. Today, if UAE does not impose taxes, what will happen? I'm just coming to the question that you are asking. I am part of a French multinational. So all the operations have to be consolidated in the French entity, the ultimate parent. We all are aware. That country, France, has a right to tax the profits of UAE at 15%. Did you hear me right? Do you agree with me, please? So today in UAE, I am making tons of profits, whatever, gracefully because of the tax professionals we have in the UAE practice, in the UAE office, doing profit shifting, profit booking, whatever you call. But at the end of the day, that French multinational, the French ultimate owner, has to pay tax in France at 15% for the UAE profits. So think you have part of an Indian multinational. Till date, so many things used to happen. You prove substance, you do this, you do that. You will not be subjected to taxes in the UAE. But please understand, tomorrow, if the taxes are not paid in UAE, not collected by the UAE government, the same company, the owners will have to pay tax in India, where it's a part of Indian conglomerate. If today you have a business who is headquartered in India, say, or who the ultimate parent is in India, then the taxes which would have been payable in UAE would have to be paid in India. Just to bring this thing, so we have to really now realize that the era of minimum 15% taxes is there. Now the only thing, see, it's a mammoth exercise. The tax authorities, the governments, because the government have to implement a legislation which will enable the collection of this, because it's a very complex issue. So this will be, and believe me, all countries in the, there is a three waves, that we call. In wave one, most of the European countries will implement this 15% from 1st January 2024. UAE has timed the taxing very correctly. 1st January 2024, or most of the companies will be under 2024, will be have a calendar of 2024. So this taxes, UAE will be able to collect it, and this will be available as a set-off against the final tax liability, which each conglomerate pays under Pillar 2. What do you, sir? So,
No.
with
So
my question of the...
now turning to your
my
question,
main
how do you
question,
prepare?
with this background I said, so with this experience of dealing with so many countries, so many taxes, this is a part of, I will not say it's a part of UAE taxes, more it's a part of Pillar 2 exercise, which we are gearing up to. Because we know we have to pay taxes under Pillar 2.
So overall, as a multinational or as a business, what do you think are the advantages of having this tax or disadvantages?
Exactly. So coming back, as rightfully Neerav sir has asked me to come back. So the biggest advantage is that we are no more a tax heaven. Please. आपको देना तो था ही टैक्स, देना तो है ही, पड़ेगा ही. तो आप, why don't we accept it? We say we are paying taxes. I'm sorry. We are paying taxes I felt, when Jay was speaking, it was a bit louder, so I put my mic down. Hopefully you can hear me. So we are paying taxes, and we are part of a regulated tax community, regulated tax government. This has a great impact on our standing, first of all. This gives an opportunity for UAE to be showcased as a tax-paying country where you have transparency, good governance. Because, see, after the introduction of tax, there is good governance, there will be tax transparency, there will be proper documentation, there will be systems. So that's the biggest plus point. See, there is also, as you're aware, UAE still is still being grey listed. There is a possibility that once this is done, you will be out of the grey list. I hope you people who are dealing, I understand you are mostly corporate professional, you are finance professionals, but there are a lot of issues when you do transactions globally, KYCs, when you do inter-country transactions. Say today you have to send funds overseas. The funds are blocked by the government, by the banker overseas because they want to do the KYC. This is all because of this grey list, UAE being grey listed. So given the introduction of tax and all these tax procedures in place, the legislation, we will definitely see this smoothening out. Things will much be better. In terms of the drawbacks, yes, there will be a hit to the bottom line. We had esteemed speakers in the last session, which they brought out about the nuances. Yes, there will be compliances, there will be audits, there will be investigations on non-compliances. There is a risk of non-compliance for the business. Those will follow, I understand. There are the disadvantages. But we also need to be aware of the dynamics or the changing landscape across the globe. And we can't be, limited to our own agenda of no tax.
Mr. Das, your comments on the subject?
From governance and compliance perspective, there are going to be many challenges so far as this tax is concerned. Essentially, let us focus and see. In governance, by definition, what we say is communication to the right people at the right time for making right decision. Right? Now, what is going to happen now is the finance department, head of finance will sit with some chartered accountant consultants, makes a strategy about its tax. But that doesn't get communicated properly to the business people. Business people will do business as per their old style. Okay? Now there the issue comes. How that issue comes? For example, there are certain detectables relating to entertainments. These people who are entertaining, everybody just in the same old fashion. Okay? And the owner will say, as long as the relationship manager is giving business, you accountant, you manage the tax. This is what he is going to say. Now, where is the compliance person now? Okay? Now, see, that gets much more complicated when you look at the recent ministerial decision 139 of 2023, okay, which supplements Cabinet Decision 55 of 2023 dealing with free zones. Essentially, there is a definition called qualifying free zone person. Okay? There is a concept called qualifying income. Now, the whole issue started initially with an impression that free zone people will not be taxed, it's only mainland people. After some time, it became very clear that free zone people also will get taxed, but some tax, but only in relation to their mainland related business. Now, it is very clear that this particular ministerial decision 133 by 2023, which was issued on 1st June, talks about qualifying activities and excluded activities. Okay? And it also talks about, apart from all these things, it also talks about the concept of economic substance. Okay? And when it read with, Cabinet Decision 55, it's very clear that, to, to, to claim certain things, you need to have economic substance. Economic substance, by test, it means having adequate resources and adequate premises and adequate employees and adequate management and direction being presented, physically present at a particular place. Now the challenge comes. The board of directors are everywhere. They will say they will do video conferencing. They will not come to Dubai. Okay? And that exactly was the issue relating to economic substance regulations also, where only 9 relevant activities were there. Now it looks like every business activity has to consider, particularly in free zone, need to necessarily consider the economic substance test. Okay? Now, for considering, one of the major things is whether the managing and directing a particular business is taking place within UAE or within that particular premises or not becomes much more important now. Now you have the company secretary. The advisor says bring the board of directors. Okay? The board of directors says the headache will start with scheduling the board meeting first of all. Dates will not be agreed. Okay? He will say, my travel plan will be this one. Some other board, you need to have quorum. Okay? Now, these are all the challenges starting from there to writing the policies and procedures and adequately training the employees. And if you are on the compliance side, you are actually sitting as, as a controlling and monitoring function, which is second line of defense. So you're supposed to monitor, detect breaches, and report the breaches. The moment you report breaches, your issue will start there itself. And remedy the actions relating to breaches. But all these challenges actually, are opportunities for us. Now it's no longer a case, somebody doing some compliance register and keeping somewhere else. Those days have changed. Record retention and starting from there, each and every piece of compliance requirements now need to be done by professionals. That's where the opportunity is.
Excellent, sir. So, like Mr. Das said, as I mentioned, that every law brings in its own unique challenges. And with free zone, we started in public consultation document with a condition which is linked to qualifying free zone person. Then when the law came out, they moved the goalpost to say that no, qualifying free zone person is only one who has substance. But then we will only give you benefit if you are qualifying income, right? So then now when the ministerial decision has come, now the goalpost is moved further. Qualifying income is fine, you have to do qualifying activity. So if you only do qualifying activity, that income from that activity is what get benefit, not everything else. So first, like he said, that we started with the concept that, oh, okay, free zone, you'll get benefit. Mainland, you'll not get benefit. They said, no, we'll take some free zones, So we'll give you benefit if you only have qualifying income. They said, no, now we go even further. Even if you have free zone, you're doing free zone activity, if you're not qualified activity, we'll still tax you. So that's the changing the goalpost, which is, very common, and we have seen that over here for many, many years. The whole aspect, and therefore the focus today, is that how do corporates prepare? And what is it that one needs to do? So like Mr. Das said, now all this is definitely an opportunity for the compliance professionals to make sure that we have right systems in place, right processes in place, and what do you do with it, right? So that's where I'll invite Mr. Das once again to say, what does a company need to do to manage this kind of compliances which are now going to come in? Okay, so if these are the compliance that we are expecting, then now, okay, we need to have board meetings, we need to minute it, We need to record it. That's one part of it. So that substance is one part of it. Second, of course, is the systems, processes, like you said, the policies. One is drafting it. Second is to make sure that somebody follows it. Right? So I'll invite your thoughts on how do we develop that segment for the corporates.
Simple answer is they should hire me. Okay?
Or company secretaries.
Then I'll bring out the change because now at this age I don't have any stakes. Right? Now exactly, in fact, Mr. Nirav Shah's question is absolutely right, and that's what is where the focus should be. What essentially needs to change is the compliance culture. Changing compliance culture, what should be the objective of the compliance culture is, change means everybody in the organization should understand a particular activity or particular definition exactly in the same sense. As we call in contract consensus ad addendum, where same two persons to a contract understanding the subject matter exactly in the same sense. Okay? Now that's where the challenge comes. Let me give a couple of examples. There's a concept called permanent establishment. There's a concept called domestic permanent establishment, foreign permanent establishment. Forgetting domestic or foreign, but permanent establishment itself as a concept as we know. What about flexi-desk companies which are sitting in hundreds and thousands? Okay? They don't have any establishment. Permanent, nothing. The establishment is the house of the owner. Okay? When we ask for audit, saying that we are going to come there, there's nothing there, I'll bring audit to your documents to your office. Give the audit report. Now that's not possible because we need to see what these people are doing actually. So first and foremost thing is, there should be a consistent approach starting from the top to understand what their tax strategy is, what type of documentation, and then what type of contracts that are getting amended, and what type of additional business practices they need to follow. Okay? This is number one. So far as tax is concerned, what they say is, it is a self-assessment. First of all, it starts with tax authorities don't come and inspect and then give a challan to you like a gas meter reading. Okay? It is for you to make the assessment and determine your taxable income and pay appropriate tax. When you are making self-assessment, this is where the problem comes in, that you want to reduce as much as possible. Even the 9% also, these people are saying, but no, that's not the reality. Even the 9% also, thoda 1.5% kam karne se bhi ho jayega na? Something like that. Okay? That is where they try to do a lot of adjustments and lot of this thing. This is where, once again, compliance role comes. We as company secretaries are committed to this thing, Satyam Vada Dharmam Chara. That is the principle that a compliance person necessarily has to follow throughout his life. Every part of the activity must be carried on with due skill, care, and diligence. If they think that you is a liberal market, forget about it. I've seen numerous instances where institutions have been fined for not carrying out activity with due skill, care, and diligence. Very recently, when FTA as a national authority has conducted some inspections related to economic substances thing, they checked and they found that in many cases the board quorum was not physically present in UAE, and they have imposed a penalty of 50,000 dirhams straight away. So now that is where our second part comes in terms of documentation. In terms of documentation, you no doubt record some minutes of the meeting, but in order to establish that the board is actually directing and managing and controlling a particular company, the board, the board minutes should reflect the deliberations on strategy, the deliberations on the review of the what kind of reviews have been connected. Say, for example, in respect of certain institutions, if setting right kind of risk appetite is a necessity, then what kind of deliberations are taking place in terms of the board members contributing to it? Those details need to be necessarily recorded. The headache for the company secretary is that they talk in such a language that half the things we don't understand. Okay? Now, that is the reason why we need to necessarily take the cooperation. This is what exactly I do. I catch hold of the weakest of the board members and tell him that whatever that is being done, I'll privately share by email my draft to you, kindly correct it. Okay? So because that is the only way, because certain things happen in such a way that you don't understand. But what is more important is every piece of thing that has been they properly need to be deliberated. If a board of directors does not speak and is sitting like that, you have to ask company secretary, भाई साहब थोड़ा बात करो, मुझे रिकॉर्ड करना है. Huh? Okay. So,
Okay.
so starting from there, several things need to change.
So thank you, sir, on your insight. See, therefore, as he has highlighted, the documentation is going to be the key driver, right? And we are going to see more and more focus on that entire documentation aspect when we take any tax position under the law. And I just want to highlight that one of the most important part of the corporate tax law is the transfer pricing. So unlike India, we have transfer pricing here for domestic transaction as well as for international transaction. When we compare transfer pricing provisions with back home in India, there are 2 or 3 important things that one needs to understand. That here, the related party definition is much, much wider than what we are used to in India under Companies Act. So India Companies Act just goes up to the second level of the kinship. Here, in fact, it goes up to 4th degree of kinship. So all the way up to great grandparents of both the spouse and all the cousins and all the family from that level onwards is all covered within the transfer pricing related party definition. Then the second trigger is the control. So in India, the transfer pricing gets triggered when you're 26% and above control. Here, of course, the threshold is higher at the 50%. So 50% of either the voting rights or the control or if you can have the rights to appoint the board of directors or any other significant influence that you can exercise in that is all covered within that control definition. So any of this related party having this kind of an transaction and having that ability to influence those transactions are all covered within the transfer pricing. There's another added animal where we have connected person, which is also getting covered within transfer pricing, which is generally not there anywhere else. It's only typical to UAE, where we have seen this aspect being added. So any key officers or directors of the company and relatives of that, or any companies which are controlled by relatives of such key officers, are also within the ambit of the related party. So if you understand this, the ambit is wide and it covers domestic as well as international transaction. Of course, the threshold of keeping detailed documentation is kept at a higher level of 200 million, but you need to still justify that your transactions are at arm's length and they are still benchmarked, right? So I'll invite Ashish, how do you see companies preparing for this transfer pricing process? It's new. You've been doing it otherwise in context of other countries. Now that you have to change that and wear a hat of UAE being now the tested party as compared to an India or other country being the tested party, how do you see the changes and what is it that you think the company should be looking at to establish in terms of systems, processes to comply with that important piece, in addition to having the internal documentation like Mr. Das said on all the other processes,
Thank you. So first, thanks, Mr. Das, for your very lucid and very open explanation about the director's roles. So I must tell you one thing. So I have been, facing transfer pricing officers across the world, And what is the first thing that they ask is, at a transfer pricing office, can we see the board minutes? They, not in the first thing, but they also ask them. They see the director's qualifications, especially in context of transaction with low tax jurisdictions. So these are the first things. Who is the bank account is being operated by, to understand the substance. And the biggest, believe me, the thing that comes to our, sorry, I'm not talking in the lighter note on this forum, the biggest person who really bails us out is the company secretary. Because he brings in, and we just go to him first. As he rightly said, business, BD or business development teams or BD people will do business whatever way they want without doing any trail, keeping any trail. And the best friends in the finance department is the company secretary. So first, a big applaud to the company secretarial team. And let me explain you why I am saying so. They keep so much of, they put in so much of amount of detailed documentation on the board minutes. We can really substantiate, and we keep on requesting them. I keep on requesting my team that please try to bring as much board minutes, try to bring as much businesses that has been discussed, so that this will really help me help demonstrate the substance in that particular jurisdiction, what has been done. Because mostly when you deal with low tax jurisdictions, they don't have so much of employees, and directors actually take the responsibility more to drive the business in those jurisdictions. Giving that, as a background, I will just try to come back to Nirav's question on the transfer pricing documentation. So first and foremost, I want to correct, sorry Nirav, I want to correct here. Documentation has been prescribed for 200 million, right? Everything having said, but we are not looking into one finer aspect which has not been mentioned anywhere. You still need to disclose the transactions, please. Going by the precedence.
So that's what I said, that
Yes.
my documentation is only at 200
200
million, but you
million,
still
but
need to justify all the transactions.
Exactly.
You still have to have arm's length
You have to
justification. So how do you go about it?
Yes, you have to first disclose to the tax authorities, these are my transactions that I did with my related parties, with my connected parties. Even a rupee of transaction, and this we are seeing in our fellow country, Saudi, in Qatar. Qatar, we are not giving a disclosure form, but yes, Qatar has a disclosure form requirement of 10 million. But yes, in Saudi, we have to do the disclosure. Arms documentation is secondary. Okay? So the first building block is in our jurisdiction, in UAE, we need to have proper setup of our ERP systems or the accounting system. I think that's the most critical one. The controls have to be put in place. Control, why I'm saying, even for a transaction, whenever it is done, it's the most critical thing that whenever a transaction is being done with a connected person, with a related party person, it has to, flash. It has to flash to the person who is entering data that, look, this is a related party transaction, and tomorrow, after some time, you will have to justify it. So then comes, it has to, unless it is flashed, the business will go on. And at the end of year, then it's a big problem collating data, collating information to demonstrate it, the business viability, and you don't know after a year, given the dynamicism of all things, whether you have teams to demonstrate or to explain you the transaction. So first and foremost is the controls that you have to put in place. The systems have to be geared to identify this. As we understand from in India, I've seen this in listing agreement. When the listing agreement actually started, there were these related party transactions being approved, being in the board minutes, in the board meeting by the committee, but here, audit committee. Sorry, even if before the transfer pricing, in parallel with the tax transfer pricing legislation. So here we need to understand with the corporate law, with the IFRS, or whichever accounting systems you are following, the related parties, as per each legislation. So you have to first identify the related parties as per IFRS. You have to understand the related parties as per the corporate law that you are following, whichever jurisdiction, whichever authority you are following, DIFC, whichever authority you are following, you have to list them and under the transfer pricing legislation of the UAE.
So that's an important part that he's highlighting, that look, in India you are used to one corporate law across the country. Here we unfortunately have 45 because every free zone has its own corporate law. And there is a Commercial Companies Act which is for the mainland. All of them do not have same provisions. Most of them do not allow you different class of share apart from equity. And most of them don't mandate anything beyond an AGM as a mandatory requirement. So all of this one needs to keep in mind as a compliance professional to see where the opportunities lie and what all you can do with all these differences and bring about those to the management and make sure that your compliances are right there to defend the overall points, you know. So Das, you want to add something to this?
Two things. Now gradually Ms. Neerav is agreeing to me that it's quite complex, not simple. Okay?
Sir, I never said it is not complex locally. I'm saying when you compare internationally, it is very simple.
Right. So, see, what I would say, so far as corporate tax law is concerned, easy to understand, difficult to implement. Okay? Now, when it comes to, the related party transactions, related party things, as Neerav Shah was describing, I was thinking of adding to my list of documents to be collected family tree. Okay? We may need to add a family tree because as a complaint,
That's a mandatory requirement now.
now it became a mandatory requirement now. Otherwise, how will you establish to the authorities whether a particular transaction is related party transaction or not? Or we should have a software like World Check where if any new person is born in a family, an alert will come here. Okay? So that you need not ask.
I'll just give you an example. A couple of days back, our institute had a session on transfer pricing. And they showed a family tree of famous film fraternity, Kapoor family. And the simple question was, if Ranbir Kapoor opens a company with Sharmila Tagore, is it related party transaction or not? And unfortunately, it is yes. Yeah? So, I mean, that's the importance of a family tree.
That's of course, on the lighter side of it. But in reality, when you look from broader perspective, when you look at a high level, there are certain companies or large number of companies actually which are regulated, which provide financial services. They are regulated by Security Committee Authority, Central Bank, or DFSA or FSRA. They, in fact, have elaborate compliance arrangements, number one. They are also monitored very well by the regulators. The third point here is, in the event of any corporate tax failure or any notice coming in, these entities are required to inform their regulatory authority that such an event has happened. Okay? Now they will start questioning you why you did not have processes in place. So it is going to be double whammy for anybody who is well regulated. This is one set of companies. You have another set of companies where as per license, they are supposed to carry on business only within the free zone territory. But in reality, directly or indirectly, they carry on business outside. When they go to lawyers, they say that if it is a reverse solicitation, there is no problem. Okay? No company maintains reverse solicitation proper documentation. So you are stuck with a situation where when it comes to expenses under this law, expenses directly related to the business activity is only deductible. Not every kind of expense. They are very clear on that. So when you are carrying on a business which is potentially in a gray area relating to your license, whether the expenses in relation to such an activity is deductible or not.
Or whether you should have done that activity at all.
So now that is exactly where I think I agree with Nirisha. First of all, we must, as compliance professionals, we should educate our management to say that don't do business in that gray area. Okay? Because that is where the problem comes in. Then another problem is business is so complex. For you to understand whether that's gray or not, actually you need to read the whole thing, figure out what that whole business is to determine whether it's actually gray area or not. Takes, for example, cryptos and other businesses which are coming up every day, new businesses coming, they're very complex. So in my view, actually, the businesses are becoming more and more complex, number one. Number two, the ability of the authorities to investigate has become simpler with the advancement of technology. Even for us also, we don't read the entire document, Control F and you will find where the word is, right? Earlier we have to read the whole typed document to understand where that word is. So authorities' ability to analyze data, authorities' access to get data from other government organizations and across borders has tremendously increased in the last 2 to 3 years, thanks to technology. So in my view, the only way of doing business and submitting the right kind of tax return of every entity is follow our motto. Nothing else.
Excellent. That's very well said, sir. Okay, so in the interest of time, I will open this up for any questions that we have from the audience, and then we'll kind of summarize the session at the end of it. Anybody has any question, or we have a very clear so that you don't have any question at all? Yes, sir.
I did refer to you, in my discussion. I didn't find you that time. I'm happy you're back.
Sir, very good afternoon to all of you. And my question was that with regard to parent and subsidiaries company, with this outcome that now the UAE government will be imposing 9% of corporate tax on this either all types of company, whether it is parent or holding. So now earlier what we used to advise to the client was that make a parent company in Dubai or UAE and make your subsidiaries company in India. And then you start your operations, and when you're getting exit, you can sell it off very easily without any corporate tax. So now what will be the impact on capital gain? So that is still not clear to us.
No, it is very clear in the law. Maybe you have not read the law.
Okay, yes, that is what I'm...
Maybe that's the
yes,
point.
Please, sir, yes.
So from the time that law has been announced, they have said dividend and capital gains is exempt, subject to conditions.
Okay.
We have participation exemption condition, and we got a cabinet decision elaborating the entire participation exemption conditions as well.
Okay.
So it's very clear that as long as you have more than 5% shareholding, you hold it for 12 months, and the participation, so underlying company is subject to at least a 9% tax rate. Whatever capital gain that you earn is exempt from UAE corporate tax. So that is very clear in the law. It's not that there's ambiguity around that. Yes, there are ambiguity in terms of what do you consider as subject to tax, how do you compute that, and there are different details given on that, but nothing beyond.
And that also, sir, in India, we have a concept of PMLA, and then we have the concept of permanent establishment. And in Dubai, we don't have all this concept per se.
Sorry, so, again, you have not read the law.
So that is what we want to know.
I'm sorry, but when you come for this kind of a session, these are at a generic level. Okay. These are not going into every chapter of the law.
Obviously.
So I would, if you want to really deep dive, go into more detail and then ask questions. Two things here. Permanent establishment concept is not there in the Indian corporate tax law. It's there in the Indian tax treaties. We have it in the corporate tax law. We are one step ahead. Okay? The concept which is not amended even in the treaty of anti-fragmentation rules and all that on the PE, we have it in the law. So we are one step ahead. Number one. It's all there in the domestic law. I don't even need to sign a treaty to access that because it's part of my domestic law. Number one.
Okay.
So these concepts are already there. Place of effective management. We have concept of control and management, which is similar to your place of effective management. PMLA is a separate law by itself.
Right, sir.
We don't need that law here.
Obviously not.
We have AML, enough laws on AML. We don't need PMLA to be here.
Sir.
Right?
Right.
So we have similar laws. My humble request to a lot of company secretary professionals. I'm sorry, sir. I'm extending my jurisdiction. Don't assume when you come back from India that you know everything.
No, sir. My question.
Please hear me.
Yes, sir. Please.
You are coming to a different country. Understand its legal system. Understand its applicability to what and where. And then try and adapt what you have learned. Your skills are very valuable. But unless you adapt to the current scenario, it's not useful.
Yes, sir.
I just mentioned, and 2 weeks back, a new company secretary had come to UAE and she asked for my guidance. That I don't have opportunity here, nobody's hiring. I said, but have you spent time on understanding that there are 45 corporate laws? How will you not have an opportunity? You all have maximum opportunity here. People don't understand this basic fact. Apart from that, there are so many laws which have changed in last 1.5 years. This place is offering you opportunities every day. A lawyer who is practicing here for last 30 years is telling me that, Nirav, I have to go back to the drawing board because now all the laws that I practice has changed. So, again, your skills are very useful. Please use them to local laws and then apply.
So that was the, sir, I was, as a young professionals who are practicing in India, want to practice in UAE.
It's
so your
not that
advice,
simple.
So what is your advice for them?
You have to spend time, you have to invest, you have to get equipped. You can't sit in India and think that everything will come in outsourcing to you. That's not going to happen. Because legal profession is something I cannot outsource. I need somebody here to do my things as per local laws, not as per Indian laws.
Thank you, sir. Thank you.
I want to add one thing to you, what you said. Because I was an Indian professional earlier. Now I converted myself here. So I'm a convert now. Now the position here is, when you come here, first of all, be prepared for a period of penance. Okay? Where your job is only to read and understand what the whole thing is. It's an extremely complex market. Okay? You need to spend a huge amount of time in understanding. And I'm sure my friend Nirav and other people must have spent huge amount of time figuring out what that law is about.
Okay, the second biggest mistake that everybody makes. You read the English version of the law, you interpret as you are used to interpreting in India. Right? That's the biggest mistake. The binding law is Arabic. In Arabic, a lot of words, when they are translated into English, may have common meaning. May and shall is common. In and from, in or from, in and from, and or are not, they are used interchangeably. You cannot interpret the way you are used to interpret in common law. You need to understand the basic rules of interpretation of civil laws. And then start saying that, okay, yes, now I have an opportunity to learn and understand this and apply. Again, I'm saying that your skills are very useful. Unless you adapt it, it will not be useful.
Would just like to add one thing. My humble request, and with my experience, I'm just sharing to everyone. The cost of error here is very high. So please understand the advice you give to the management here. If you falter, it's 10 times than India. See, we need to understand that this is a very new country. The laws are new. So the penalties are framed as per the current cost of living or so that they want us to follow them. Indian laws are pretty old. The penalties are still from a medieval era. So the cost of making a mistake is less there. I can give you a simple example. There's a small form called ESR here, Economic Substance Regulation, which everybody is aware, right? I think everybody knows that you have to maintain minutes for certain relevant activities, except for holding company, whether they give an exemption. Just one form, if you fail to provide in time, what is the penalty? Your business take, and if you make a wrong disclosure even, so there, please, I will not get into ESR now, but I'm just trying to share my experience with what Nirav sir has said. Please be, mindful of the jurisdiction what we are in. We can't.
So, in simple example, the penalty is 50,000 standard for all the thing that you do. Now, 50,000 dirhams is not a small amount.
Small amount.
And if that continues in the second year, they have right to close your business. Now, ESR is only an information form. And just for information, that's the consequences.
Add one sentence here. You are not protected by Constitution of India here. You don't have the fundamental rights.
So, Mr. Das comes up with his one-liner, which are very apt. And I thank you for that, sir. Okay, so just to summarize this session, first of all, we would like to thank you, ICSI, the management and the team, for giving us this opportunity to wonderfully discuss this whole. I wholeheartedly thank both my panelists for giving all the suggestions and the right responses. We have given you some flavor of the corporate tax law. We have tried to tell you or tell corporates that it's important to prepare and it's important to relook at what you have been doing so far, because here, while it's simple in terms of its application, what is important is not to make mistake. And that's where one needs to see what is that you are on the right side. Currently, we are suggesting everybody look at your group structure, because here people have been taking licenses just like that without even understanding the implication, because there was no implication of having a license except paying fees. Now you're compliance. So that's double fees, right? So that's one needs to look at, review the group structure. One needs to relook at their accounting policies, because people in the name of IFRS followed many other policies. without taking names, they never followed IFRS in spirit or in culture, and still auditors were signing it. But that's a separate aspect. Now all those needs to get more discipline. And one needs to revisit those all aspects. Again, like Mr. Das said, they used to book all and every expense in the company without distinguishing whether it is for business or for personal. So all that needs to also get streamlined. And therefore, it's more about bringing in more discipline in doing your affairs than anything else. And that's what we tried highlighting as part of this panel. And we thank you all for patiently listening.